Hello and good afternoon. Welcome to Hoenle Group's earnings call for the preliminary numbers fiscal year 2024-2025. I'm very happy to have with me the CEO, Dr. Franz Richter, and the CFO, Robert Stark, who will guide us through the results of the preliminary 24-25. There will be a Q&A following the brief presentation. Please feel free to enter any questions you might have into the chat box on the lower right-hand corner. Please make sure to preface each question with your name and your company name so that we can deal with it accordingly. I wish us all a great presentation, and without further ado, I hand it over to you, Dr. Richter.
Yeah, thank you very much, and welcome everybody to this earnings call. As said, we presented the numbers this morning on the through the channels, and we have prepared a few slides to go through the numbers. These are just preliminary numbers, and I would ask Robert to go through those two slides, and then we can go into Q&A session and answer the questions you might have. Robert, please.
Thank you, Franz, and also from my side, good afternoon, everyone. I would walk you through the preliminary and unaudited figures of the fiscal year 24-25. Starting with sales, we generated 93.7 million, which is 5% below the prior year. That means that we missed our original sales ambitions for the year and came out below the last year's level. The shortfall, as already presented in the upcoming year, the shortfall was mainly driven by two factors. We had a continuous reluctance in investment in the mechanical engineering sector, and secondly, a weak automotive market, which affected in particular on the curing and adhesive systems business units. On the positive side, our disinfection business developed in line with our expectations, delivered growth, and is providing us stability for the group. Turning to the profitability, we achieved an EBITDA of 5.8 million, which is up 5% versus the adjusted prior year. And this improvement reflects the impact of our cost-cutting measures, process efficiency improvements, and in the last year, a more favorable product mix. So that said, we delivered at the upper end of the latest published guidance ranges. And more details to the business units, to the cash flows, these will follow in end of January when we are going to publish our annual report. And so far, these are the two key financial figures for the fiscal year 24-25. Providing an outlook for the upcoming year, the market environment is still characterized with a high uncertainty. So therefore, we are kind of cautious and have a corridor for the sales volume of 95 to 105 million and an EBITDA of 6 to 9 million. What's coming next? We will publish end of January our annual financial report. On February 24th, our first quarter financial statements, and have in March our shareholders meeting. So far, a few words to our results. And we are open and happy for questions and discussions.
Thank you so much for the insights that you were able to share with us at this point in time. I do have a first question that is regarding the EBITDA margin improvement. If you could give us some more background as to how much of this is structural from product cost cuts at one hand, and how many of those are temporary measures that will not carry over into fiscal year 25-26?
So the EBITDA margin improvement versus temporary measures. So they are very less temporary measures. So the very most of it is really from our product mix. So we are expecting that we can carry over these effects into the next fiscal year.
Okay, great. Thank you. I have two questions which basically go along the same lines, and that is looking into next year, which product segments would you expect to drive growth the most? And the other question that was a question that came from NuWays, and basically the same question at the same time was asked from our analysts as well, which segments, product lines do you expect the most to contribute to growth next year?
Yeah, I think the highest expectation, of course, in this business unit, which works best at this point in time, is disinfection. There are very interesting projects we are discussing, but also with the others, especially with adhesive. Adhesive is doing quite well right now. The short term, let's say within a year, this next year, improvement will mainly come from more sales activity. Right now we are pretty weak in the Americas. Also in Asia, we are very much centralized on Germany and Europe. But there's no reason that we could not, especially in the US, where we don't have any cultural difference, at least not significant ones, where we should also be able to reach customers with the existing products. And of course, all new developments in USPs and additional function features, that will take a little bit more time. So that is probably in 2-3 year time frame, but the sales increase can go relatively fast. And that should basically go with all business units, with probably disinfection first, adhesive second, and curing is the third one.
Thank you. And another question, and you mentioned that during your brief presentation, was the weak automotive demand that was hurting curing and adhesives. Do you have an idea of how that is going to develop in your upcoming or in the present business year, if you want to say that? And also, I think you mentioned engineering as one of the holdbacks a little bit. When do you expect that to improve?
Well, the mechanical engineering and automotive, I mean, that is. I mean, we have to look to our end markets. I mean, as I said, disinfection, there is a significant opportunity which we do not address enough in other areas with food industry. I mean, there is the whole food industry in the Americas is not really addressed by us at this point in time, not enough. We do also have in the electronics, which is not really mechanical engineering or automotive, also consumer electronics. There are applications that we are working, or we are, let's say, discussing with partners to really strengthen our position against these big companies in this semiconductor industry, where we probably today appear as a small, but in a solid partnership with other companies, we could improve probably our position here also in a shorter time, not in 2-3 years, but in one year time frame. So I do not think that we are only depending on automotive industry, but of course, if there would be more investments from the automotive industry, that would help us well. But I don't see a dependency really.
Can you give us, and this is a follow-up question regarding the automotive sector, can you give us a little bit more field granularity as to how big the impact of automotive is on your business, i.e. how much of revenues it is, and how much impact on the result it actually had, that there was a little less dynamic in that space?
Yeah. So the biggest impact was clearly in the business unit adhesive systems. There were less new projects. It was a big slowdown in the market activity, which definitely resulted into a decline in this business unit. We are now very more focusing on also different end markets where we see clearly a better performance, like medical engineering or consumer electronics. So therefore, we are like Franz said, not depending on the automotive market. So we are looking to accelerating markets like medical.
Okay, thank you. Another quick question. You reported 9 months results a couple of months ago in quite some granularity. Can you give us a feel about the last quarter, i.e. Q4 of the fiscal year that just ended, and maybe an outlook of what happened since then? Were there any specific applications, any demand situations where you can see an improvement or maybe a further deterioration? What were the industry trends in those last 4.5 months?
Last quarter? I mean, the last quarter was stronger than the third quarter, but that was all within the expectation. As you can see, also from the guidance range, the fourth quarter came in a little bit stronger because it brought us to the upper end of the guidance range. So therefore, that's fine. But I mean, there's not one specific application which stick out. As I said before, disinfection right now is probably the most active area where we see most of the orders coming from.
So basically, it's a continuation of trends that we've seen in the first 9 months. There was no further deceleration.
There's also not a huge change that anything happened to the positive in the fourth quarter. I mean, there are some orders also even from curing came in, but again, this I would not over analyze here. So in general, the fourth quarter was a little bit stronger than the third quarter, but quarter by quarter, I think this is all within the expectation as reported.
Okay, great, thank you. Looking at China, do you see any upcoming or increasing competition from Chinese companies in particular? And do you maybe have some examples as to where this is intensifying or becoming more relevant?
No, I mean, of course, China is a topic that will touch all the industries, whether that's the policy there, China for China. The situation for us as a company is, of course, and that is the only reason, the only way to be successful. We have to look at USPs where we have something special, something unique, customer depending for the solution solving feature at a customer. And then that means we are increasing our on-site technical salespeople, so to speak, or sales support people to get in a closer discussion with customers on a technical level. We are not really in the high volume market yet, unfortunately, but we are not in the high volume market where you would really see more Chinese competition. If you are unique, special discussion in close discussion with the customer, so then that is the only way where we can really differentiate ourselves. And that is true in China, that's true in the US, that's true in Europe. So I do not see that we have a specific challenge in China other than be close to the customer and be fast.
Thank you. Coming to your outlook, and the question is related to the statement that geopolitical stability is an important factor to reach the guidance. And I think after what happened the last 9 months, that is very understandable. But the question actually asks if you could be a little bit more exact as to what changes or uncertainties you potentially foresee and how that would impact your guidance for next year?
I mean, in principle, it's more a safe harbor statement. I mean, in principle, our guidance is depending on discussion with customers, with our market. That is what we expect. We do see growth potential. We do see growth potential in some areas stronger than others, as I mentioned before. In the short term, I mean, within a year, 1 or 2 years, we are weak in our market position in the US, also in South America, in, for example, disinfection. There is a significant food industry also in South America, slaughteries. I mean, it's very known there, and here we are weak. That is what we can do. Geopolitical, I mean, that is basically, I mean, of course, I mean, who had September 11 on the radar, who had Lehman on the radar? If something happens in China, in the US with respect to Europe, and that changes the situation, that is not covered here. I mean, we are planning on the current geopolitical situation as it is right now, plus minus slight changes, but that is what we have under control, or what we have better insight in, and that all others we have to exclude.
Okay, great. Thank you. Looking at, we've talked about top line a lot, looking at bottom line and potential incremental savings from restructuring or cost optimization in the currently running business here. Do you see any more tailwind coming from that? Do you have any projects that are still underway, or are you pretty much done with that?
I mean, the measures we have taken, these will have a sustainable effect also for the upcoming year. We have also ongoing projects for working capital measures and projects there. So therefore, we will still have some effects in the upcoming year, but yeah, basically it's ongoing.
All right, thank you. I have one more question that is related to something that happened a little earlier around summertime, and that was the change at the helm of the company, where you, Dr. Richter, came in from the supervisory board to replace the old CEO, and the question is related to this as to what the reasons behind the management change in September were. I know you've had a call on this already. However, it seems like there are still questions out there. If you could address this briefly, that would be great.
Yeah, as mentioned before, it's nothing that any dramatic circumstances happened. So I mean, basically, when I came in first time, that is now 2.5 years ago, we had to change from the, at that time, previous management, and we changed a little bit the structure of the company, introduced the business units, and focused on markets where we believe, and believed at that time, still believe, where we have a growth potential. Then we looked for a new CEO, and Markus Arndt came in and then took over. And 1.5 years later, it's just my and the board's, I have to speak for the board, but also my impression, we did not really execute on all the opportunities we had. We were not aggressive enough. We was still the question about how close are we on the engineering level with our customers, and if we are not close enough, we will never be able to find really the technical issues our customers have. And if we can solve those, if we can support our customers in solving those issues, we are unique by definition, and we are at that time in a much better market position, as if the customers just define what they need and they come to us and to our competitors, and we are just me too by definition. So that transition and that focus on engineering engagement with customers was not happening, not strong enough, and so finally we made that change, and I believe I'm a strong believer in that, and took over again. So we, as I said before, we will, in the first step, it is limited to 1 year, but I will not leave that position here before we have really our feet on the ground and are moving in the right direction, and so that is not really limited to 1 year only. That is something I think by the time of the General Assembly, we will probably have then better picture how we continue, but we will not have another change before the work is done.
Great, thank you for shedding some light on this. We are out of question from the way it looks, so let me just ask the audience if there are any additional questions that you have not posed yet. Please feel free to do it now. Oh, I see there is one more question coming up. Hold on for 1 second. Question is regarding your product mix, which you mentioned was favorable last year. What way in particular do you expect this to continue or develop in 2025, 2026?
This trend should be to continued. The base or the reason is we handed over the sunlight simulation business, which was with very low margins at the Hoenle Group. As well as we had a decline in the equipment for the printing industry, and but had therefore more orders and more sales volume in industrial products, in LED systems, which had a higher margin, and this should be to continued.
Thank you. I will try to bridge another few seconds just to give the audience a chance to enter additional questions if there are any open unanswered questions at this stage. If there are not, I will take this opportunity to, of course, thank the audience for their input and great questions. And of course, thank you, Dr. Richter and Mr. Stark, for your time and the insights that you have shared. I think with this, unless we get an additional question, we should be done with the call. Of course, Mr. Weiner, the head of IR, stands ready to answer any additional questions you might have in the aftermath of this call. Otherwise, I wish you all a pleasant afternoon. And once again, thanks for participating in the earnings call. All the best. Bye.
Thank you very much.
Thank you.
Bye-bye.
Bye.